Hello, my name's Rob Nixon. I'm the CEO and founder of the Proactive Accountants Network. I'm delighted to bring you part 3 of our 12-part series about revenue, profit and cash in an accounting business. Part 3 is all about your average hourly rate, or what's often called your net firm billing rate. And this, of course, is measured by revenue divided by number of client hours it took for the whole firm to get to that revenue. Now, as we interview firms and we work with all shapes and size firms, typically this is in the mid-100s range when we first get started with them. A few years down the track, we would expect that to be over $400 average hourly rate or net firm billing rate. And as you'll discover, it's got nothing to do with charge rates. Because if you keep a charge rate model, you'll only ever get above $250 unless your salaries go through the roof as well. And we're looking for profitability here as well as margin in our work that we do. So how are we going to do that? How are we going to increase our net firm billing rate or average hourly rate? Number one, every single project must be priced up front. So you've got sign off from the client beforehand. Now, pricing up front every single project, so annual compilation's a project, an annual budget, a business plan's a project, a 401k, a superannuation is a project, individual transaction per project priced up front, an email or paper exchange with the client to say, yes, I'm happy with that price and scope of works. Number two, when you price up front, you must do that with extreme courage. You see, you don't know what the right price is. I have a saying that the right price is just before no. You see, if they keep saying yes, then the price is wrong. So you must test different prices to see, and you get better at this, to see what price you can charge for what you do. You see, when it comes to pricing, the pricing belief comes down to your personal belief and your client's value perception. So your value belief and your client's value perception will determine how courageous you will be in pricing up front. So the better you get at articulating your value, the better you can understand your value, the higher price you will charge. And the third element to having a very high average hourly rate or net firm billing rate is to drive time down. So you get super efficient. Now, of course, in a price and arrears model, you're not interested in efficiency, because if you do the work in 10 hours, you get $3,000, for example. If you do the work in 20 hours, you get $6,000. So you're actually disincentivized to be efficient. Well, here, when you've priced it up front with maximum courage, you're incentivized to be as efficient as possible. So you follow our 18-step workflow process, and you have an hour's budget on every single job, and you have a focus of taking the labor out of the job and driving the time down. It's got nothing to do with charge rates. Charge rates should disappear. They're surplus to requirements when you price up front. Keep the timesheets, though, as a measure of your performance. Average hourly rate, net firm billing rate should be going up every single month, because that indicates you're getting more efficient every month and you're getting better with pricing every month. This is one part of 488 separate strategies. We'll email you for free what's called the Accountant Strategy Map. You can download it, you can put it on your wall. You should never be short of an idea again. Send an email to report@proactiveaccountants.net, and we'll send you the whole series of this 12 parts of revenue, profit and cash as well. I hope you've enjoyed it.